Right, I'm going to be bringing to you guys volatility 75 strategy, and like I always do, I always show you guys results most at times before I bring the strategies. So I'll show you the winning trades, I filter them, I show you my losers, which are always smaller than the winners. All right, so after that, you see that I'm going to bring to you a powerful strategy. Just make sure that you watch till the end. It's not magic, it's not robot, guys. It's just simple price action, simple demand and supply. All right, I'm going to be bringing to you. So make sure that you stay tuned till the end. Hello traders, welcome back to my YouTube channel. Today's video, I'll be sharing with you guys a volatility 75 scalping strategy, price action strategy. We're going to see how easy this strategy is and how accurate it is. So we are going to be using support and resistance in collaboration with the Bollinger bands and the moving average. So we are going to see that in a minute. All right, to begin, I'll start by showing you how to add this indicator to your charts. As you can see here, it is clear that the Bollinger band, it acts as support and resistance. You see the upper band here acting as resistance and the lower band here acting as support. So you can see that price is ranging within this indicator. So to add these indicators, you just simply click on the F icon, which represents the indicator. It's going to take you to the indicator window. You are going to see a couple of indicators here. So we'll be working with the Bollinger band. This Bollinger band, you are going to add our period to be 20, deviation 2.000, shift 0, apply to close, 2 pixel, and you choose whatever color of your choice. So you click on done, you're going to see it appear on your chart like this. So I'm going to give you some rules that you are going to use in order to apply this strategy effectively and efficiently. So we are going to add the moving average. This moving average as well could also help us to know when to determine our short-term scalping take profit. So we are going to add the 10 moving average, period 10, shift 0, exponential, apply to close. All right, so you're going to apply to close, then you click on done. That's the black line, as you can see here. Sometimes it's going to act as our point of take profit. So when you take your trade here, for instance, if you are scalping, you don't want to stay long in the market. When price move up and then it reaches the middle, it acts like a sling. So you might want to be closing. If you don't want to close, you might be locking your profits. If you have a very small account and you want to preserve it. All right, so that is it. Okay, now I'm going to give you some simple rules that you are going to use in following and applying this strategy. Number one rule, we are going to be applying it to areas where price is, let me say, ranging. A situation where you can call it to be ranging, where price is not actually going up, price is not actually going down. All right, you can see quite already in a bigger time frame, price can be in the up in an uptrend, but in a very small time frame like the 30 minutes, it might be ranging. All right, so in this situation, you see that when it is ranging, you realize that this Bollinger band acts well because this acts as resistance, and the lower Bollinger acts as a resistance, as support. All right, the next rule is that we are going to be applying this strategy when we have a Bollinger band spread. So I'm going to explain what that means. Bollinger band spread means that the green Bollinger lines, they are not close to each other, so they are spread wide apart from each other. I'm going to show you a situation where they are squeezed. All right, so let me show you. You're going to see situation where they are squeezed. You see situations like this, they are squeezed. You can see that they are not very spread out. So you see these are close areas, and in order to identify these areas where the Bollinger bands will be spread to apply it, it will likely be in situation where the market is ranging. When the market is ranging, the band, they usually tend to spread out. Okay, so after we have established those rules, you are going to see now that how are we going to use it in combination to price action. In this situation now, we pick up our rectangle, we try to connect. So this is the resistance, we connect the support. All right, this is the support down here. can see that. So you realize that the upper Bollinger line is around the resistance zone, while the lower Bollinger line is around the support zone. All right, so it's as simple as this. You buy around the support zone. All right, so you want to be more as the upper Bollinger acts as support, as resistance, while the lower Bollinger acts as support. And you see that it is exactly at the point where we have our rectangle, which is the resistance here and the support here. So that is it, guys. Just as simple as that. You can see how price has been reacting to this Bollinger band for a while now. Taking our immediate entry, we are going to be using our price action, that is our candlestick patterns, our reversal candlestick patterns. So you can see from here, you realize that when price moved down here, you see that price got rejected around this zone. Let me reduce this so that you can see the candlestick very well. So this is this candlestick around here. You can see that what happened is that price was coming down here until when the bears push the body of this candlestick right down here, but the bulls push it back up, causing what we call the long wick below. So you can see it's like a tail. So this long wick now, it shows that there's a rejection, that the bulls are about to take over. So the confirmation now is coming from Bollinger band lower line, while we also have it around the zone where we have our rectangle. So you see that's a confirmation to enter. And if you're entering in this situation, you are going to have a very good stop loss. So your stop loss is not going to be wide, because if you're entering here, your stop loss is just going to be below here, and you're going to have a good risk to reward ratio. So you can see that up here we have a scenario like that. You see a rejection candle here, and you see something like that still happen here. We had the same scenario, the best push and the bulls push, and you see something like piercing the line. All right, so you can see. Let's go to the next example here. You see a candlestick pattern here. This three candlesticks pattern forms something which is known as the morning star candlestick pattern. You see the bearish candle, then you see this doji, and then you see a long bullish candle. All right, so if we had entered based on the doji, all right, we are going to place our stop loss, and then our TP is going to be somewhere up there. But you see from here, you see how price moved and then reached the moving average, got rejected, it came back from a double bottom, and finally it got broken. So it came back now to retest the zone. All right, so you can see. So the last row is that we are not going to be entering when the candlestick that closes around this zone is too long. If the candlestick is too long, for instance, just say we want to enter here, our stop loss will be too wide, and we'll now have a good risk to reward ratio. All right, so if you see that you are going to enter a trade where your stop loss is going to be too wide, it's risky, don't enter. I know volatility 75 is too volatile, especially for small accounts. If you have to take too much loss in one trade, it's going to affect you. So that is it, guys. You just enter a support, and then resistance, you're out. So let's see if you are going to see another situation. All right, okay, this is another situation here. You can see that this is a ranging situation. You see price acting in accordance with these hour zones here. So you see the upper Bollinger acting as resistance, and the lower Bollinger acting as support. All right, so you can see how price move just as we are actually explaining. And now you can see rejection candles around here. These are doji candles, just as we have explained in the other example. You can see this. All right, see, look at rejection candles when price came down here at the lower Bollinger, entering here and placing your stop loss below here. You see how price moved, guys. And when price came up here, it was the same thing. Look at the bearish rejection candle. After the bearish rejection candle, you see how price moved down. I hope you can see how the concept is just as clear as that. From here, you can see this is a bearish engulfing candle here. It's a bearish engulfing candle. And remember that when we are using rectangles to plot our support and resistance zone, because it is a zone on its own. Price could come and just hit this zone, come down, or sometimes it might come right up. All right, so you see this is just as pretty clear as that. Here we see a bearish engulfing candle. See how this red candle engulfs this and then close below here. All right, you see how after that, you see how price move with a lot of momentum right till it hit the zone right down here where we saw another move. So that is how the strategy is, guys. Just as simple as that. You don't need to complicate your charts. You just need to follow the rules and you're going to make the profit. Thank you for watching. If you are new to this channel, please click on that subscribe button, click on the like, click on the notification bell so you don't miss out from any video that we are going to be posting. Thank you. See you in the next video.